Welcome to T5 here at freetradingvideos.com. Enjoy the show.
Welcome to the Weekly Rag for Sunday, November 25th, 2007. The Weekly Rag is where we take the time to take a step back and get a better understanding of the larger picture. Coming over here to the market grid, remember this shows us how the investing public feels about things. 80% and above, or green, really shows some optimism about that area of the market. And 20% and below, or red, shows a lot of pessimism in the market. Looking at your larger time frame, which ranges from about half a year to a full year, you'll see a lot of yellow out here in the major markets. Sitting here on close to the middle or the lower end of the range, this shows a lot of indecision out here in the market right now. That's why we have our margin turned off. This is not the best of market environments currently. All the optimism that prices will continue to climb are in the commodity area. The climb so far has been fairly aggressive. You'll see a lot of 80s and 90s out here. Dropping down to the market caps, you can see the small caps, or the smaller size companies, have taken it on the chin the hardest, with the larger caps kind of following along with the market a little better. It seems that high risk, high reward is kind of out of favor on Wall Street right now. Coming over here to a weekly chart of the S&P, you can see that the S&P tried to make a new high here, and this is a big high, you guys. This is an all-time high for the markets. But after trying to get up there and make a new high, you can see we've fallen quite dramatically down back to this prior low area, giving us just some sideways choppy action. The Dow is basically in the same boat. Again, this was its all-time high for the Dow that it failed to make there. The Nasdaq's still holding its uptrend together. If we can start moving up here, we'll form a higher low versus the prior low, keeping its uptrend intact. Looking at the euro, we had a big move after clearing this resistance area. Oil had a very dramatic and aggressive move up to its all-time high area. Gold seems to be continuing its run after clearing its resistance area. Bonds just in the last couple weeks have broken through resistance, and it kind of needs to stay above this yellow line for this uptrend to stay intact. Looking here at the sector sentiment, the areas with the most optimism tend to be still these consumer staples, utilities, and the energy area. There's a bigger list of areas that are out of favor in the market right now. Those include these transports, the semiconductors, the financials, and the consumer discretionary. Areas that seem to be kind of changing right now are your industrials and your technology. You'll see we have some mid-range action going on with a dramatic shift into the red here, so these may be losing favor. Similar to what happened to telecom up here a couple weeks ago. As we look at the charts here, we can see that materials, energy, technology, and consumer staples are all still holding their uptrends. Here you can see energy in a position still to place a higher low versus this previous one, keeping its uptrend together. And materials, a nice little pullback down to support after making a new high here. Transport, semis, financial, and consumer discretionary are all falling in downtrends, and we saw this on the market grid as well with sentiment. Here the transports, after making a real small new high, have come back down and crashed through this support area, so they're looking pretty weak. Semis have had a bad fall the last couple months and are now back to this area that could end up becoming support. The undecideds include telecom, utilities, and healthcare. Here, again, telecom failing to make that new high and now back down to this support area. Utilities, even though they're going sideways, we have a lot of sentiment in this favor. Again, hanging out at this upper end of the range is always better than the lower end. So to kind of sum things up, we're just not in the best environment right now, chopping around sideways, so keep that margin turned off. We're going to run a tight leash on things and just try to nickel and dime the market, so to speak. This won't last forever, and we'll be in a different environment soon enough. We just have to be patient and bide our time.
Thanks for spending your time with us. Have a great evening. Hey! You can lose a lot of money trading. These are not recommendations of any sort. Just opinions. Always remember, a fool and his money are soon parted.